This video is on the technical analysis of XRP USD, which is also known as XRP Ripple. And at this point in time, we find ourselves on the daily chart. And on the daily chart, we can see that the market currently is in an upward trend or an upward trajectory. Also, another thing that's also very much important is the fact that we had this inverted head and shoulders pattern, with this side being the left shoulder of that pattern, this being the head, and this being the right shoulder. And we can also see that the neckline of this particular pattern is more or less at that level. And because this pattern started at this point, more or less, ideally we want to see the trend or the movement end more or less at that level. However, we may potentially see also a situation where price comes back to the neckline to test it, and if it does so, where we have the neckline is where I believe we should be looking for those potential buying opportunities. And as I said, our take profit would then be this level over here, which is in line with where this inverted head and shoulders would have started, in my very humble opinion, right? Another thing that I also want to mention is that the neckline may align with a key number that we have on the Fibonacci retracement tool, and if that's the case, then indeed it would confirm that we should be looking for those potential buying opportunities where we have that neckline. And there we go, guys. We can see that the neckline, which is over here, of this inverted head and shoulders pattern, we could say aligns with the 50% Fibonacci retracement level, and that should price from where it is come back to that level. Indeed, we should be looking for those potential buying opportunities. That is because we have confluence, guys. We have confluence, right? Number one, we have the formation of this inverted head and shoulders pattern. Number two, we have the neckline being violated to the upside. Number three, we would then have price come back to the neckline to give it a test. And number four, we have the neckline aligning with the 50% Fibonacci retracement level, right? Another reason is that the neckline is now also a very strong level of support, as we've had multiple rejections in and around that area. So as I said, should price from where it is come down to this level. At this level is a very good level to be looking for those potential buying opportunities. And if we do indeed find entries at this point, I believe that our first take profit should be around here, which is, as I said, in line with where this structure started, right? However, having said all this, because we're in an upward trending market, ideally I would love to see price actually move further up to around this level, to this very strong level of resistance at this point in time. Another reason why I say that we may also see price actually move up to this level is because we actually have this candlestick over here, and what it is a bullish candlestick which has a relatively small body and quite a long upper wick. And where that wick ends at the top, we have a lot of liquidity there, and liquidity is actually money that needs to be triggered by the market at one point or another, as I usually say. So there is plenty of scope, guys, for the market to move further up to around this level. But as I said, I think the best thing to do right now, in my very humble opinion, is to wait for the market to head back to where the neckline is. And at that neckline, due to those reasons that I've given you, I believe we should be looking for those potential buying opportunities, and our first take profit should be around this level if we do indeed find any opportunities at this point, which is in line with, as I said, where this inverted head and shoulders pattern actually started. Having said that, remember that we also have a lot of money stuck at that level in the form of liquidity, and liquidity represents money, as I say, and the market is likely to go to that level to grab that liquidity.